Good evening, everybody. Unfortunately, this is going to be kind of a lethargic session because the market is so lethargic. So today, the reason I put out the warning or to be careful early in the day was even though the indexes were trading higher, we still had to look at the nature of the market, which was waffling sideways. So that should be in the back of your mind in the first place. And so what we want to see based upon the current nature of the market is whether that nature has changed. So today, with it opening positive, the market's opening positive, we definitely needed to see something that told us this sideways motion was out of the question. And that's why you have to wait to the end of the day or see what it's doing during the day. But as you can see on the Dow, it came right smack dab to the 50 and then started selling off. The NASDAQ, right in this level and started selling off. So there wasn't anything that kept the bullish steam going in the early trading. And it hovered up here, it wasn't going anywhere, and then they started drifting it for the rest of the day. So again, the first analysis was, what is the market doing? Market's been waffling. You need to see something that tells us that waffling is over, which would have been a good strong day. The fact that they closed it back to this level tells us the nature of the market hasn't changed. The S&P ran into trouble at the 34, still in a sideways mode. The transportation index came right up to the 34 and went back into the trading range. And we saw the corporate bond index open positive and come back into this trading range in the overbought area. So that is just a kind of a comprehensive explanation to say these markets still haven't done anything to tell us we aren't going sideways in the sideways trend channel. So our training for this Saturday, the top ranked signals and patterns, are appropriate for this type of market condition. What we want to do is find the chart patterns that have the highest degree of probabilities, or what we would consider the top ranked signals and patterns. And that's, again, a visual analysis of what everybody else is probably looking at. So when we saw this morning star signal on MNSO, and today it did a doji, held up reasonably well for a market that was selling off. But now, what can we anticipate if we were long, let me make this bigger, or thinking of going long? Well, we probably have a good evidence that if it opens positive, the doji rule says, yes, there's your doji sandwich. And if we have a doji sandwich after a morning star signal, what's that pattern become? The McMuffin pattern. That's bullish confirmation. a doji sandwich is additional bullish confirmation. You add those two together, come bouncing off the 50. What should we anticipate? Wave 1, wave 2, wave 3, bouncing off the 50, could likely have a target going up to the 200. So again, this takes the guesswork out of what you should be doing as far as your entry and what things should be happening based upon what the type of candlestick signals and patterns that's set up. The opposite. There's your bearish engulfing signal on BGTI. So what made this a compelling short? Now look at all the indecision right here at the 50. Then a big bearish engulfing. Didn't execute today. Stochastic's coming down. They came up. They failed at the 34 in the T-line area. This becomes a very high probability trade setup. That if it opens lower tomorrow, you could be shorting it. Or if it comes back down through this level, that's a pretty good indication they're confirming that bearish signal right at a level that everybody else is watching. CTLT. This is that high probability confirmation. There's your bearish best friend, failure at the 200, right about the same level it's topped out before. Makes this an extremely strong reason to stay short on this position. And DOCN, that same scenario, except this is a kicker signal to the downside. And what were all the pieces of evidence that told us the bears were in control? First of all, the kicker signal. Secondly, the fact that they gapped down through the 34, the T-line, and the 50. Third, they couldn't support at the observable support level. So what do you do with this one? You just stay short until you see a buy signal. We also have bullish charts that are now questionable. Chewy held up well in a downtrending market, but notice the nature. Looked like it was doing a J-hook, but now we've got a weak signal. This makes it very simple. You put your safety stop just below the T-line, because if it comes back in that direction, it's telling you they're not going up. All this indecision is now telling you the direction they want to go in. So this all becomes just very simple analysis of what the signals are telling you. Fate, hanging man signal, bearish confirmation. Strategy is simple on this one. If it opens lower in the overbought area after a hanging man, bearish confirmation, and it starts trading down through the T-line, what's it tell you about your uptrend? Your signal told you it's gone. So another one, cocoa. Up until Friday, it was holding up well. But then what was the nail in the coffin? There's your bearish engulfing signal in the overbought area. After it couldn't move, this one you would have closed out today. Because what is your probability factor? It's sideways. It's had a sell signal. The Stochastic's rolling over from the overbought area. What are your probabilities? The only thing that could benefit is it opening positive and going positive, and that would be only one out of your three possibilities. It could trade flat, or it could trade down based upon everything we're seeing here. Bearish engulfing closed below the T-line, Stochastic's rolling over. That's not a good place to have your bullish funds. You close it out and try to find something better. Same scenario here on TGTX. Hanging man still didn't close below the T-line. However, look at your booster. They reverse this. If you were long on this one, even though we're not below the T-line, if it starts trading lower or opening lower tomorrow, close it out. Again, this hanging man, bearish confirmation. Now that T-line factor becomes an important aspect to the analysis of the bulls and the bears. So here's another one of those that had a good strong sell signal. I would have closed this one out today, figuring if they opened this positive, the market was trading positive, they were going to go up at least to the T-line. But now we got that doji. If it opens lower, what's it tell us? They failed to get up through the T-line. That bearish kicker influence is still in progress. So there's a lot of times where I'll close out a position, or everybody should close out a position. You can always come back. SQSP, same scenario. Look at your big evening star signal with a shooting star, best friend. Bounced up. I would have closed this position out, but now what do you got setting up? There's your double doji. If this opens lower, you can start shorting it immediately. And LPSN. Another one that was more evident. Look at your failure up here. At the 50, a bearish Harami doji, gap down. What'd that tell you about the 50? They weren't going through the 50. They were more than likely, well, that's not what I wanted to do. More than likely, when they failed here, this downtrend was still in progress. So the appropriate thing to do was they opened up positive, started trading positive to close out the short position. But remember what our color of our candle illustrates for us immediately. When they came back down through the open, and that candle was turning red, what's that tell us about the bulls and the bears? It tells us the bears are now still winning. You could reshort this position. Or if you were short, covered it, it comes down through this level, meaning open lower. Now we got something that tells us wave 1, wave 2, possibility of wave 3 coming down into this area. And IMMD. What's this telling you about your trajectory? Bearish Harami, bearish left-right combo. Who's winning? Obviously the bears are winning. You close out the position on weakness. So all this is visual analysis. Did I not do this one? I didn't. Telling you when or what the probabilities are of something moving in the correct direction. Or so here's one where you add everything up together. Kind of a double top failure at the 50 through the T-line. Now you have that trend kicker signal. Opens here, trades here. Gaps down, goes the opposite direction. I'll go back to that in a second. But what other piece of evidence do we have that this is strong bearish? Look what happened right here at the perceived support level. or even this support level. It's broken, so this one could be shorted. Didn't execute today, but if it opened lower tomorrow, you'd be ready to short this one. Okay, INMD. No, it didn't close below the T-line. But what is the most important factor when you're analyzing a candlestick chart? The signals. So you're climbing up toward the overbought area. You have a bearish harami. Not anything devastating because we're expecting a 45 degree. Next day it holds up. Nothing there yet. Yep. Thank you, Joe. And then you've got another sell signal. So who's winning the battle at this point? You've got bearish signals up here toward the overbought area. That's telling you the bullish strength isn't there. B does look like a good short. Juan, bring it up when I tell Jim to do the double line. Okay, and the biggies. NVIDIA. Gapped up, going in the right direction. That's all right. And observe the obvious. They took it right up to basically the 50 and sold it off. It gapped up on a good bullish signal, but if I was long and it came up here, it wasn't overbought, where would I have stopped out? If it came back down through the open, that told us the bears were back in control. That is where you close it out. Now, we call this new indicator the Pelosi indicator. That if the Pelosi's are buying something, just kind of figure. They know something. You probably want to jump in it if it's a good chart. Netflix. You can see it's not doing much of any magnitude. However, look what you did today. That becomes a trade setup, meaning if it opens positive, you've got a doji sandwich. If the magnitude, let's make this big enough so we can see it. The magnitude of this candle is going to be this candle. That means we're heading for this breakout area. Tesla. Let's go. Absolutely sideways. Another one where if you got real confident today and say, up, they've gapped it up, breakout, it's strong bullish chart, where was the logical place to put your stop? And where it opened. Because logic says they take it up and they come back down through the open. Remember what the open illustrated. The bulls are taking control. If they come back down through that level, what's it tell you about the bullish strength? It's not there anymore. Amazon is a prime example also of the nature of this market. Just absolutely sideways. And Apple was strong early in the day. Now it's done a bearish left-right combo. Yes, they were slowing down on their hiring, but look where this occurred. Right there. The Stochastic's in the overbought condition. If you're long Apple and didn't close it out, I would have probably had a stop at where the low of the yesterday or Friday's doji was. But if I didn't stop it out, thinking that's not below the T-line, what's my trading strategy tomorrow? It has to open positive and trade positive to stay in it. If it starts trading lower, we've got all the evidence we need that the bearish left-right combo is starting to pull back. And if it comes down through the T-line, where do you think they're ready to pull it back to? Back to the 50. Okay, so I was illustrating in the afternoon newsletter that the reason you want to learn the top ranked signals and patterns is because it gives you a few advantages. One, the probabilities have already been illustrated or demonstrated that they result in very high probability trades. Whoops, I'm colorblind. So that red candle gaps up the next day, your kicker signal, that started your uptrend. So there's 15 of these top ranked signals and patterns. And the thing that I stress, because a lot of people say, well, man, there's so many good trades or good setups, how do we learn them all? And I always advocate learning 3 or 4 very well, knowing exactly what they should be doing, where you should get in, how long you can stay or should stay in, the other simple parameters like the T-line, and when to get back out. That way, if you learn 3 or 4 and become a so-called expert at those signals, now you're not at the whim of having to decide or having to listen to somebody, or you're pretty much in control of your own investments. Which one did I just do? Oh, so this is why we recommended, well, for crying out loud, this one. Because look at your 2+2 analysis. Nice strong uptrend. There was your reversal signal. Where were they going to bring it back to? Probably the T-line. And look at your kicker signal. Kicker signal, and what type of pattern was it setting up? First of all, the assumption is if you've got a kicker signal, you're ready for a strong uptrend. Secondly, if they're going to do a strong uptrend, what type of pattern can you expect as far as a price move? There's your J-hook pattern. So when I look at this, once you become accustomed to recognizing the signal and the pattern, it only takes a fraction of a second to say, oh, we need to be looking at that one because it's got a strong buy signal and a good pattern setup. Yes, there's your J-hook pattern. So where would we think this price move is going to go? Well, if this is wave 1, wave 3 should be that same magnitude. Oh, so there was a few others. There's your trend kicker signal. Again, we're going to go into detail on these and not only illustrate why they work, but the psychology behind them and what the expected results are. So look what this is doing. You can see the slow curve, fry pan bottom. You can see the T-line as a resistance level, which it had been all the way down here. But now you've got a trend kicker signal. So you had a buy signal right here. You had this trajectory starting to come back up. Now you have a trend kicker signal, and what does this illustrate? Buying, profit taking, and then strong buying again. What is the assumption here? That trend kicker signal implies more upside. More upside implies a fry pan bottom breakout. At least you know you're in the right direction at the right time. Also, another element to the signals and patterns is that the probabilities of them moving in the correct direction, no matter what the market is doing, is much greater in your favor. Is it common to have to trend kicker? Is it common You have meeting line. Oh, no, this isn't a meeting line. That's just a down day and an uptrend. A meeting line usually occurs either in the oversold area. This was already in the trend, so that's just a down day and an uptrend. I don't see any buy signal. Well, this was your buy signal. There was kind of a little bullish engulfing here. You could see the trajectory starting to turn up. So it wouldn't have been intriguing at this point. There's nothing there that tells us this is anything to go after. But that's what you're looking for. That is the signal magic. That is the signal. It may not have been very compelling at this point. Nothing there. But this now becomes your signal because you can see what it's doing. It's adding to that pattern. Helpful if you state the ticker. Oh, okay. I'm sorry, WB. This is SLVM. And so when you see something like this, kind of the same scenario, MARA, M-A-R-A. Notice your best friend signal. Notice kind of your doji sandwich. And kind of a doji sandwich trend kicker signal breaking through the 50. Slow curve, what does this imply? The bulls are trying to take control of this one. Would I buy this one? If they open this positive and start trading positive, yes, that's confirming that bullish strength. Okay. Same thing on the short side. Here's your bearish kicker signal. Where do you think your next target is likely to be? Somewhere down in here. Remember that the kicker signal is your strongest individual signal. It implies there's a lot of force to the sell side. And you'll probably see this one recommended tomorrow. There's your bearish trend kicker signal. BL, WB. And notice what it's also doing. Look at the support level it broke. What's that kind of imply? They're not supporting at this level. They broke out. They did it with a strong sell signal. Look for more downside. Okay, let me see what else we got here. Now, on any given market, let me go back to this. If you're trading the ones that you normally, or I say only trade, or everybody's watching, and you can't trade the biggies like Amazon or Tesla because they're in a sideways mode, the one thing that always I kind of illustrate is that no matter what the market direction is or the lack of market direction, we're going to be able to find in a bad day 3, 4, 5 good chart patterns. Let's be more specific. We're going to find 3, 4, 5 minimum of bullish patterns in a down market. Same scenario on the bearish side. If the market's heading up, you're going to find 3, 4, 5 good bearish charts, minimum. Now, on a good bullish day, the market reversed at the bottom, you might find 60 good bullish charts. At that point, you want to have a method to cultivate down to the best one of those signals. And that's where the top rank signals and patterns come into play. That there's going to be a lot of good charts during an uptrend. What we're trying to do is find the best charts during that uptrend, or basically we want to make as much hay, while the sun shines as we can. So we want to take advantage of the strongest patterns. So on a bad day, Z-Lab, you can see kind of the belt hold, the support of the T-line, the slow curve, the gap up. Wouldn't be afraid to be buying this one on positive trading tomorrow. Now, I say positive trading. If we see the market, or the Dow's going to open up down 280 points, it may not be jumping into anything just yet. Want to give it a little bit of a watch to see what's happening at that. See whether they're still buying even in a down market. Now, we were watching Billy today because Billy was a good, strong chart. There's your Morningstar best friend, up, open at the 50, through the T-line, through the 34. But it closed back below the T-line. And what is the inference? Inference? Is it closing below the T-line? The bulls are not in control. If I had bought this today and I saw the market was selling off and this was coming back down here, I would have probably closed it out. Said, all right, I'm going to wait to see what it does tomorrow, because I know the probabilities just went against us because it closed below the T-line. I would rather do that. In my younger days, it was just excruciating to buy here because you had a good chart, you analyzed it correctly, things are going to make a lot of money on this trade, and at the end of the day, it's down here. The rationale was, oh, I'm going to hold on to it just to see what it does tomorrow. The problem with that is we don't know what it's going to do tomorrow. Close out the position. It's not a good trade anymore. It needs further confirmation. So why sit in something that still needs, when you're probably going to be able to find a chart out there that has a lot better indication of which way it's going to go. So FIGS was also a good-looking chart, but at the end of the day, it closed back below the open. Now, if I had bought this today, I would have closed it out. If I had bought on this day because of the J-hook best friend signal, now I'm telling myself, all right, give it another day because it's got a strong pattern, a bobble breakout. It should be going up, but I'm going to keep a safety stop right here. If they open it and start trading lower, that means my trajectory has gone from this to, at best, something like this. I want to come out of it and find something that has a better trajectory prospect to it. Schwab, now that was a more compelling chart today. I wouldn't have bought it today because it's right here at a level that everybody is watching. However, notice what we have. A support level, a bullish Harami hammer type signal, a gap up, and closed right here. Now, I'll always get a lot of questions saying, well, could we have bought it on this day because it's doing a signal? The answer is yes, but has this confirmed yet? No, it needs to open positive to confirm this signal, number one. And number two, to confirm the fact that the 50 and the 34 aren't going to act as resistance. I would rather pay for it up here, knowing that it was confirming and breaking out, than trying to preamble guess that it is going to go this way. Because for all we know, the market opens up down 280 points. This one opens here and trades here. I have to take my money out and go someplace else. I would rather have that improved probability. Yeah, it's either going to be a bobble breakout or it's going to be a failure. I'd rather pay up for it knowing that it is a bobble breakout. Whoops. LTHM. Another one And I think we even had that question in the chat room today. Can we be buying this one? And I hope my answer was correct when I said I would rather wait to see it close up here and buy on positive trading because we don't know what it's going to do by the end of the day. But it would have been the same scenario. If I had jumped the gun and I bought up here because it looked like it was doing exactly what we expected it to do, hammer, doji, best friend gap up through the T-line, the Candlestick's coming up. It had all the indications of being a good, strong chart. But I would still rather pay for it up here the next day, knowing that it confirmed, versus buying here and then having to close it back out because it did this. I think some of the oils, they can be bought. There is your bullish best friend. Series of dojis, a gap up, and a close near the high end of the range. That becomes a much more confirming chart to tell you the bulls will step back into the oil stocks again. Now, if I buy on positive trading, I know the probabilities are much stronger that it's going to be trading positive. NRT, same scenario. Look at all the dojis. Remember, the more dojis you see, which illustrates a lot of indecision, if they do a strong chart one way or the other, a strong signal one way or the other, that tells you after that long series of indecision, they have made their decision. Wouldn't be afraid to be buying this one with the expectation at least it's going to come up and test the 50 and then see what to do at that level. Callow, kind of the same scenario. Not quite a bullish doji sandwich, but the same implications. But the confirmation was that they closed above the T-line, they closed above the 200, they broke this downtrend. First target, second target. Second target, obvious, because there's a gap to fill up here in that area. If those go up, then gasoline also go up. Correct. And that is on the basis that crude oil was up today, down 72 cents, but you can see what the direction of crude oil is. Doji, hammer, doji, bullish confirmation. Looks like crude oil is bottoming out. Worst case, or let's see, not worst case, but one scenario is that even if crude oil isn't going up, just kind of languishing in this area, you're still looking at crude oil at $100 a barrel, not going down. That means gasoline prices aren't going down. At $100 a barrel, there's going to be a heck of a lot of oil stocks that are going to come back because they make a lot of money at $100 a barrel. So there's a bunch of these. EOG, you ready to buy this one on positive trading? See what Occidental is doing. This one, I'd wait for it to get up through the 200. I'm sorry, the 50. And ExxonMobil, kind of the same scenario, big basing area. So, and here's another element to why the oils, or buying something in the oil patch is good. Because if you find one that has a strong chart to it, that's got its own confirmation. But is this a renegade price move? Meaning one oil stock is up because of something. Well, if you look at all the other oil stocks, and they're also trading positive, and now you can pretty much assume they're buying that sector. Let's find the best ones in that sector. Did I do boot? another another decent looking chart. Hammer, 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 gap up. Another one that you can get ready to buy on positive trading. There's your fry pan bottom breakout. Observe the obvious. So this was on Marshall. Are you in here tonight? Marshall has very good eyes for finding, I don't see him, finding the good charts. And his question was, are we too far away from the T line to be a buyer? And that's why you want to know what the expectation is coming out of a pattern. What do we expect coming out of a fry pan bottom? A very strong price move. What's that mean about your T line? That's just a secondary consideration. The pattern itself is what you want to be looking at or evaluating. Whoops, I'm getting way behind schedule here. NOTV. That's not doing what I want it to be doing. NOTV. Best friend or hammer gap up. What I tell you about your T line? There's a new investor sentiment. If you're buying this one on a strong best friend type signal, you want to watch to see what happens once it gets to the 50. Oh, man, I got to quit drinking this early at night. Zim, same scenario. If this opens positive tomorrow, what do you got going? A breakout, doji sandwich, more likely some more upside. Let's see. S-Fix. You can see the pattern setting up. The fry pan bottom. Another one that could be bought on positive trading. There's a gap up here, which means your 50-day moving average is at least a viable target. And Walmart. I don't trade Walmart because it's too slow and stodgy. But if you like Walmart, look at the pattern set up. There's your double doji. And where's your double doji occurring? Right smack dab at the fry pan bottom breakout area. So what's the 2+2 analysis on this? 1, they're up through the 50. 2, they're trying to break out of a fry pan bottom. 3, if it opens positive, what do we expect? The double doji, probably a magnitude move like this. What's that tell us about the fry pan bottom? It's breaking out. Now it becomes your next logical target up here. So it might not be a big percentage mover, but it's probably a high probability mover, which means maybe you do a spread, a 135, 140. Or I don't know if they probably got 132s and 137s, something that makes sense on a high probability move, even though the magnitude of the move might not be huge. All right, so on the short side, probably going to see this one as far as a good short setup. If it opens positive or negative tomorrow, you're in wave 3. Oh, just hitting the wrong buttons here. Bearish kicker signal on SGEN. High probability they're heading down much further. EXAS. Where were we today? kind of a breakout area. And what did it do? What did the chart tell us they did at the breakout area? A bearish left-right combo. What's that tell us about the 50? They're probably aiming back up. Let's make this smaller. You're in a downtrend. Buying, they can bring it up and do a sell signal at the 50. What's that tell us about the downtrend? More than likely, it's still in progress. Now look for this area to be your next likely target. And EOG, what's your downtrend, or what's your downtrend telling you? What's your trend telling you? You're in a downtrend. They couldn't get back up through the T-line. What's that tell us? If they open this lower, kind of breaking this level, more than likely, this long downtrend is still in progress. And JB, one of your favorites, AUPH. This, that. They trade this one lower. Look for it to head to this level. And if it breaches this level, still sideways. But if it breaches this level, could be a lot more downside. And VCYT. What's this telling us about the overall trend? In a downtrend, didn't get back up to this level. And what did we see happen? A bearish engulfing signal in the overbought area, closing below the T-line. If it opens lower, where's your next likely target? Back to the 50. So analyzing these charts is much easier as a candlestick investor, because essentially all we're doing is seeing what is everybody else doing at levels that everybody else is watching. If you see a bearish engulfing signal right smack dab at a resistance level, a bearish left-right combo, the stochastic's overbought, that just gives us that much greater degree of confidence to say if they're opening this lower tomorrow, the probabilities are extremely strong. This downtrend is still in progress. So this is the, I guess, the major function of candlestick analysis is you don't have to be a technical analyst. All you have to do is recognize what the Japanese rice traders have, get rid of that thing, illustrated to us as signals and patterns, and then applying them with our additional confirmation. If you're in overbought condition, you're seeing a sell signal at a resistance level. Now you're just improving your probabilities of being in the right place at the right time. Look at the pre-market or the futures, they're absolutely flat. So what was a good short if you just use that very simple concept where your bearish left-right combo occurred? Right smack dab at the 50. Where was the place to cover your short position? You saw a buy signal and a close above the T-line. Now what's happened to this chart? Not only has it reversed course, but now it might be a good long position. This thing is just driving me to drink. There we go. All right, so the analysis of the markets are simple. We're in a summer doldrum, basically going sideways. And today's action was pretty good confirmation that that little resistance level was continuing to act as resistance. Again, there's two methods of trading this market. One, if you're in things that are kind of producing whipsaws, get you in, get you out, get you in, get you out, might just say, all right, we're in a not a good trading range. Let's just sit out for a while. Let's get mentally refreshed. Everybody else is taking a vacation. Let's take a vacation. Or on the other side of the coin, if we know we can find good, strong buy or sell signals, let's go after that. But they have to have very compelling charts. Okay. So are there any general questions on candlestick analysis? Oh, somebody was asking earlier, how long is the training session on Saturday? We always advertise it that it's probably going to be at least 4 hours, going from 10 to 2, but figure on 10 to 4. Netflix or any chart with doji sandwich potential, if it opens and trades positive and then falls off, at what point do you decide the signal didn't work? Two spots. Say it opened right here. Let's make this big. Opens right here and starts trading positive. Where do you not want to see it trade? Back where it opened. Or definitely back below the doji type day. Is that a dark cloud on the S&P? No, you wouldn't call it a dark cloud, Doug. You just call it a failure to break out. You're not a dark cloud range because look where your stochastics are. You're still in the middle of the, just sideways on the stochastics. So that's just a down day failure of breaking out of the range, but you're just waffling in here. So now, had it occurred here, like up here, opened here, and closed down here, yeah, that would be more relevant as far as being a dark cloud signal. All right, any other questions? If not, Jim, go ahead and do the double line. And in 4.1 seconds, do the next double line. Let's see. Visa, somebody was asking about, so I don't forget. Look at your bearish left-right combo, right smack dab at the level that it topped out before twice. What's that tell you about your trend? More than likely it's coming back down. Lab D. You could be buying this. That meant Labu was starting to sell off. So Lab D you could be buying. And QCOM, That's your bearish left-right combo in the overbought area, a good distance from the T-line, and what other factor? Right there at the same level it topped out before. Hut 8. Oh, Anita. Is that a symbol? Box D broke out. You could be buying this one on positive trading. Use the T-line on as your stop. Next, another one that if it opens positive, you got a double bottom here. Look for a positive open. If it opened lower, I'd close it out because that means it's still in a sluggish downtrend. Riot, another one that had some strength to it earlier. Myra ended up a lot better. But if this opens positive tomorrow, you can still be buying the fry pan bottom breakout. DNK. Gapping up, gapping up. I would at least watch to see if it can get up to the 200. And VET. Now that's what you wanted to see as a breakout. First of all, you had this little downtrend. Secondly, you had the 50. You had your hammer. So you could, let me see if I can do this without goofing up too badly. Kind of a little V formation. That one you could be buying. Oh, that's also an energy stock. So, yes, that's a good chart. Goldman apparently had good earnings. However, you've got a Morningstar type signal. Now you have to see whether this is a message. And remember, a message is they gap it up but close it lower. So if you bought this, it has to open and trade positive. If it starts opening lower, it tells you they fizzled. Goog, I probably wouldn't short it. But I definitely would not be long on this one. Here's another one that if you bought on positive trading today, as soon as it came back down through the open, you would have closed it back out. And I point that out because a lot of people have a hard time using the concept of cutting your losses short and let your profits run. The reason I keep pointing out that when it comes back down through the open, that tells you the bears are in control, close out the position. You're much better off taking that quick, small loss and having that cash back in your account ready to put it someplace else than holding on to something that you know is not a good bullish chart anymore. And that's not sage advice. That's from the voice of experience. That you don't want to hold on to a trade. Get rid of the losers as quick as possible because there's always going to be winners someplace else. Net, nothing wildly exciting yet. I probably wouldn't pay attention to this at least until it got up through the 50. You can see you're in this still in the sideways channel. And grab, now that's more compelling in the sense that they did keep it up through. It's still not wildly exciting, but you can see where the resistance level is. You could buy this one on positive trading. Just don't let it close back below today's close. Whoops, I went way too far, too fast. TRT, good breakout. I would see what the news was, but you can see the indecisive trading here. Now they've told you which way they want to go. San Juan, stay long. Definitely need to see it open positive. If I was long, I'd have a safety stop at today's open, because if it came back down through there, that's a pretty good indication they're taking profits at the 50-day moving average. ABCL, you would have been out of this one. You would have been out of this one yesterday or Friday when they closed below the T-line after failing to go through the 50. So I don't know whether I would short this, but you definitely want to be out of a long position. United Health, another one that didn't turn out to be very pretty today. This might be implying a resistance level. Another one that if it opened or traded lower tomorrow, I'd close it out. Just not a very pretty chart anymore. Myrna, not a great chart either. I probably wouldn't be long or short this one. Just no direction. MMI, stay long. Want to get through this level. But that doji gap up, or doji hammer gap up, at least implies coming up to the 34, hopefully the 50. AMGN, that's not a good chart. I wouldn't be long or short this one right now. If you were long, you should have closed this one out today. There's nothing on that chart that is telling you whether the bulls or the bears are in control. Micron, another bearish left-right combo. It looks like it filled the gap. Almost, maybe. But did a bearish left-right combo. That's exactly what you don't want to see, especially up here in the overbought area. I would have closed this one out today. And that's because they must have started selling off near the close. Look at Advanced Micro had hit the 34 and started selling off. Here's a good example, too. A lot of people ask, why do you have the 34 instead of the 20? The 34 works reasonably well. OKE, stay long on this one. Energy Fuels, you can stay long, but it got a little bit dicey. It has to open positive and trade positive, or at least stay above the 3T line. If it starts coming back down, you're still kind of in a sideways chart. INMD, this one you wanted to close out because you got a bearish Harami and a bearish left-right combo. The Candlestick's rolling over. That's not a good sign anymore. If you had stayed long today, it has to open positive and trade positive. If it starts trading lower, close it out. Not a good chart, especially right up in this area. Bumble, that one you should have been out of. You could possibly go short. Not your best short, because you're probably coming back at least to the 50, which isn't a huge percentage move, but you could short it. Did I do AMAC? Yeah, AMAC kind of fizzled today also. Same scenario. If this one opens lower, this sideways channel is still prevalent. Phillips, not a wild, exciting one, a major institutional trader, but the oils are trading positive. You can stay long on that one. RADA, oops, that's starting to roll over. Very simple. It has to open positive and trade positive. If you're long, after your Hangman, Harami, Doji, kind of a doji, if it opens lower, it's lost its luster, close it out right away. Why? Nothing great yet. Even though it's trading above the T-line, it's not doing anything with any great resiliency. I probably wouldn't pay attention to it until they break out through this level telling us wave 3 is in progress. And Shopify, another nothing chart. Would not be long or short. That's it. Another sideways chart. Would not be long or short. There's your nice fry pan bottom. The expectation is they're heading in this direction. The safety stop is just below today's low. Hot. Okay, that's better. Hot. Another low curve breakout. If you're buying this one, it opens, needs to open positive and trade positive. If you want to be real conservative, you wait for it to come back up through the 50 the second time. Go on. This one did a bearish left-right combo. That showed you pretty much there was a failure at the 200. If you were long, you should have closed it out. Wouldn't be going short, though, because you're still above the T-line. That, stay long on this one. Johnson & Johnson, were they supposed to report today? Anyways, that's a nothing chart. Would not be long or short. Caterpillar, same scenario. Nothing there to get excited about. Whoops. No, that wouldn't be long or short in this one. IBM. Sold off big. How big? Well, bam. Whoops, that was regular hours. Okay. Now, IBM used to be a market mover. I don't know how much of a market mover it is anymore. But obviously, it's going to put some sort of drag on the market. And snow, I say a drag on the market because we're going into earnings season. And everybody's kind of expecting good earnings to pull this market up. However, there's not a lot of bullish confidence in this market. So anything, okay, thanks, Happy. Anything that is a disappointment is going to probably get clobbered pretty hard because the sentiment is not very bullish right now. So any bad news is likely going to be more amplified as far as selling things off if something doesn't reach expectations. Snow, a nothing chart. Not going or doesn't have any perceivable trend. Big bearish engulfing signal changed this J-hook trajectory to maybe at best this level. If I was long, it has to open positive and trade positive. If it trades below the T-line, close it out. Will, from what I understand, watching a documentary on Microsoft, that Bill Gates had had rented a Victorian house somewhere out there in California, came down the steps, past his secretary's desk, was ready to head out the door to get a sandwich, and they said, "Oh, you've got visitors here." And he looked in, and there was 3 guys in their 3-piece suits. They were IBM people. They needed I forget what the basis is, the program. They needed a program for their computer, and so without one, Bill Gates said, "Yeah, we'll get it for you." And then he went and bought somebody's program out of New Mexico for 50 grand, and that's what started operating. There you go. And that's what got him started. So yes, IBM was the one that got him going. ADTN, good J-hook pattern. Stay long on this one. Okay. Again, I'm coming back to the ones that we knew had very high probability. Whoops, hit the wrong one. That's just a fine howdy do. Which one? CPNG. Had high probability expected results. A J-hook pattern starting off the next wave with a kicker signal. I don't know why we do that, but that's your next target. All right, everybody. Well, here I thought this was going to be a quickie. Something like this. Get ready to buy on that J-hook pattern starting with a gap up. Bill, that's probably true. And same thing with Oracle. Oracle is making most of its money right now off the cloud. Yeah, but you can see that's not well known just yet. RJ, I have no idea. And it doesn't even matter what I think. Because like most typical investors, what we analyze is usually wrong. That's why I always say, let the market tell you. Let the market tell you what the market's doing. So, RJ, I don't even want to even speculate what that's going to do. We'll have to let the market tell you what it's going to do. Gary, I've got relatives that work for Oracle, and they say the same thing. But here's one of the observable points of American industry. They make money in spite of themselves. Yeah, I saw Intel was having trouble with its price move. Well, no, I've seen something different. That's a better chart, but had a little bit of a negative to it today. Now, if I understand, NVIDIA has a lot of their chips for the automobile industry. So that might, again, this is just speculating or hypothecating, they might be doing incentives for people like NVIDIA that need to be cranked up because they affect other major industries like the automobile manufacturing. Yep, so again, you have to, I always look at it this way. People that are studying what the effects would be on helping out the chip industry, there's a lot more intelligent minds doing much deeper analysis of where the positive and negative effects will be in that industry. So my answer to that is, why should we try to figure it out? Let's just see what everybody else has figured out. Okay, so the overall market trend is still very blasé. Not doing anything until we see a breakout one way or the other. Okay. What is the record for the longest day training? Oh, it wouldn't be the longest day. I think on some of our 2-day that were supposed to end, we'd start at 9:30. They were supposed to end at 3:30. Some of them have gone on to 6 o'clock. But the nice thing about this type of analysis is, because it's all visual, the more you see something and the more you understand what happens in human nature, it's not like you have to learn the formula or numbers or percentages. All you have to do is visually recognize what's happening in human nature based upon the charts. And that's a much easier learning process than trying to analyze and know what the numbers are, that sort of thing. Happy that's true. That everybody gets the recording, whether you can show up or not. And if you want to go through it more slowly, you can email Abraham and say, could I get the PowerPoints? So that you can look at each one slowly. So, all right, everybody. We'll see you bright and early tomorrow morning in the chat rooms. We'll see you then.